Welcome to Japan Market Brief, the daily English audio update on what moved Japan's markets and what matters next. April 8th was a classic relief rally session in Tokyo. Japan's Nikkei 225 surged 5.29% to 56,239.58. That kind of move looks dramatic on its own, but the reason matters. The rally was driven mainly by a U.S Iran 2-week ceasefire deal, which sharply reduced the immediate geopolitical premium that had been sitting in oil, in shipping risk, and in Japanese equities. So the first read on today's market is simple. Tokyo was not celebrating a sudden domestic growth boom. It was reacting to a sharp drop in external stress. NHK reported that the Nikkei at one point rose more than 2,800 yen after the ceasefire agreement. That gives a clear sense of how much relief investors were pricing in. Oil was the second major channel. WTI crude briefly dropped into the $91 range after the headline. That matters a lot for Japan because the market had spent recent sessions wrestling with the opposite problem: higher oil, more shipping risk, and more concern that imported inflation would keep pressuring households and margins. Dollar-yen also moved in a more comfortable direction. The pair eased to around 158.4, meaning some of the most stressed recent yen weakness narrative backed off. Taken together, lower oil, lower immediate geopolitical stress, and a firmer equity tone produced a very powerful rebound. But that does not mean the underlying macro picture became clean. The Bank of Japan was not the direct story today, but the rate backdrop still mattered. Japan's 10-year yield had already reached 2.43% before the latest rebound, the highest level since 1999. That is important because it tells you the market is still carrying a restrictive funding backdrop even while stocks are bouncing. In other words, lower oil helped, but Japan did not suddenly return to an easy macro environment. Dollar-yen moving lower on the day helped sentiment, but it did not erase the broader issue. The market is still trying to balance three forces at once: less geopolitical stress, still elevated yields, and a domestic economy that has not convincingly re-accelerated. That is where today's domestic data become important. Real household spending in February fell 1.8% from a year earlier. The coincident index also slipped 1.6 points. Those are not the kind of numbers that support an argument for broad-based consumer strength. So even though equities rallied sharply, the domestic demand picture remained soft. That is why today's move should be read as relief first and growth second. Today's stock to watch is Zensho Holdings. NHK reported that founder and chairman Kentaro Ogawa died on April 6th. Zensho matters here because it sits close to the everyday consumer through restaurant brands like Sukiya, and because it is large enough to be judged both as an operating company and as a governance story. There are two ways investors can read this. One is that Zensho is a stable operator with enough scale, systems, and brand reach to move through a leadership transition without much damage. The other is that a softer consumer backdrop makes succession and execution risk more visible than it would be in an easier environment. That is what makes the stock worth watching. It is not simply about management change. It is about how the market prices resilience in a major consumer-facing business when demand data still look weak. For the next session, three things matter most. First, whether oil stays lower and keeps taking pressure off Japan's import cost story. Second, whether dollar-yen remains away from the most stressed recent levels near the upper end of the range. Third, whether the market can hold this rebound even if domestic data continue to look softer than the equity tape suggests. If Tokyo keeps rising while spending and activity data stay weak, the market will increasingly look like a relief trade sitting on top of an unresolved domestic slowdown story. If the rebound starts to fade quickly, that would tell you today's move was mostly about position reset and not a durable change in conviction. That is all for today's Japan Market Brief. Thanks for listening.